Hello, everyone, and welcome to MarketBeat Monday. I hope everyone had a great holiday week. We are so glad that you could join us here today on what is the last MarketBeat Monday of 2025. It's almost New Year, and we have a lot to cover. Joining us now, as always, are MarketBeat analysts Thomas Hughes and Chris Markoch. Guys, the big question right now is this December Santa rally actually happening, or are we seeing kind of a turnaround today? We're hearing mixed reviews. What do you guys think?
To me, I think the Santa Claus rally is happening. Chris pointed out that technically it started on Friday and runs until next Monday. But I'm looking at last week's price action, seeing the S&P 500 drift up and setting a new all-time high. To me, that breaks the market out of a consolidation range, a bullish continuation pattern. And for me, it reaffirms my 7,400 target. One of the things that I've been writing about the last few weeks in the weekly preview is how that target, which seemed to be so aggressive and unattainable at the beginning of the year, is now looking like a lowball target, because a lot of the year-end updates for next year's price action from some of these major firms are putting the market in the 7,900, 8,500 range, which means that we could blow past my target easily and keep on moving higher throughout the rest of the year. So then getting back to that question about Santa Claus rally, will the market move higher this week? It looks like it could, but if it doesn't, I don't think it really matters.
Interesting. Chris, any thoughts from you?
I think it's too early to tell off just today. I'm hearing a lot of people kind of saying, well, because the market's a little down today, that means the Santa Claus rally is over, which I don't think is true. I think today's price action you're seeing is clearly a result of the fact that the gold and silver trade reversed a little bit, which makes total sense because both gold and silver were up at record highs, and they're going to pull back a little bit. You're seeing a little sell-off in the tech sector, probably due to some profit taking. If you start seeing this continue all week, then it's fair to say the Santa Claus rally didn't happen. But I agree with Thomas's larger point. Even if we don't get the true Santa Claus rally, I don't think that really changes the outlook for where stocks are going to go in 2026.
Right. I think that we should talk about, or at least point out, the seasonal factors that are also driving the market right now. If you think that the stock market is an investment, people's tax planning, all these things kind of run on an annualized basis.
Right.
Where at the beginning of the year, you're going to buy some positions, and then hopefully as the year goes on, you can take some profits. So this year, what happened? We had a little bit of a rise at the beginning part of the year. We had a sharp correction. And since then, we've had a really wicked hot rally. With the market ending the year much higher, the S&P 500 gained, 40%, over the middle part of the year. But my point is that in that annual seasonality with the market, people were buying first part of the year with the market up as much as it is the end of the year, we're just profit taking.
Right.
A lot of people, the bulk of people that are in the market make their money when they sell those stocks, when they lock in their profits, especially money managers. They have to book profits to be able to say that they've made money to get money. Yep. So for them to be selling right now is just natural because the market's way, way, way up. To me, the trends are still very bullish. So I would expect to see the first part of the year buying to happen. So even if we get a pullback in January, it might be a lot like it was this year, where that pullback leads to a buying opportunity later in the year. And then we have another wicked hot rally.
Mm-hmm. Well, very good. I know one of those stocks that you're bullish on in particular for the new year, Thomas, is AMD. That's one of the ones we've had a viewer ask about. So we're going to get right into the stocks. If you've never been with us for MarketBeat Monday before, we're so glad you're here. Basically, you can see people adding all kinds of different stock tickers into the chat. Let us know what you want us to cover. We're going to take a cold look at most of these names and just kind of give a quick evaluation of what's going on in the stock right now, maybe what might be driving that stock movement, what analysts are saying, and give you a better picture of whether now is the time to look at some of these stock names. So let's get into the first one. That's AMD. Chris, Thomas, this one not doing a whole lot to end the year, it seems like.
Right. Advanced Micro Devices is in this wait and see period. Their business is being affected and boosted by AI, but the real story is going to happen later on in the year. We've been talking about this for a long time, the launch of MI450 products. As it is right now, AMD is a niche competitor with NVIDIA, but when it launches MI450, it will be a direct competitor with NVIDIA. And when that happens, with the demand situation the way that it is, I expect to see AMD's revenue surge. I mean, like really surge, like an NVIDIA-like surge, where we get like triple-digit gains sequentially the first couple of quarters, and we sustain triple-digit year-over-year growth for many quarters after that. So until then, we're in this wait and see mode. But what I would think will happen over the next couple of months going into the back half of the year will be more news that supports the outlook for robust MI450 sales. We've already had a couple of players announce orders for this product. So I think that we'll see more news along those lines, coupled with outperformance in the core business already. I think all those things will help drive market sentiment. And if we don't get a rally before the MI450 is launched, when it does launch and we start seeing the results affirm this outlook, then we'll get a really nice pop then.
Yeah, I know you talked about AMD quite a bit in our year-end video. I don't know if anybody watched that. Let me know in the comments. If you saw our Christmas Day video, Chris and Thomas and Jeffrey and I were all together at our home base here in Sioux Falls, South Dakota. So if you haven't seen that yet, make sure that you're subscribed to our channel. You can scan the QR code or just hit subscribe real quick on the channel. That way you know every time we have a new video. We post a new video just about every day, even through this holiday week we've been posting. We had that really fun Christmas Day video where Thomas talked a lot about AMD and his bullish outlook for it in 2026. If you want to hear more about that, make sure you go watch that video too. All right, we have a lot of people asking about kind of the same little group of stocks, so we're going to go there right away. I know eHelp wanted to know about Applied Digital, so we're going to get into that, but we'll also talk about NBIS and Coreweave in that group, maybe MU too. So we're going to talk about this group of stocks for a minute before we get into some of the other names that people are asking about. Applied Digital has earnings coming up in just a little over a week. Looking at the chart for this one, it's down from the highs still quite a bit right now, but we've definitely seen a lot of volatility just in the last couple of months with this one. What are your thoughts moving into earnings?
APLD, NBIS, Coreweave, to me, are all kind of in the same boat. I think that they're all going to report blowout reports. The channel checks are saying that GPUs and GPU capacity is sold out. Many of these companies are building their new projects based on firm contracts, so they're selling out before they even build the new facilities. So to me, that just means the revenue outlook is pretty much assured. It's just a matter of when they start realizing those revenues as they complete their projects and get these new clients up and running. As far as their stock prices go, there is some fluctuation from chart to chart, but generally speaking, they all kind of reflect the same thing, which is that massive surge when the AI boom kind of was affecting these companies, set them up to their all-time highs. And since then, because that surge occurred so far in advance of when their revenue boom is going to happen, it provided the market some opportunity for profit taking. We have some short sellers in the mix, kind of helping to weigh down on the prices. But since the correction, we've hit a bottom. It looks like these stocks are finding support at their 150-day moving averages, which to me is a really good sign that shows some conviction among buy and hold investors and institutions. So far as that support holds, I think that moving into the new year, we'll see these stocks begin to rebound for the very same reasons we were talking about before. Just profit taking in the back half of 2025 will become repositioning and buying stocks in the first half of 2026.
A good look at kind of the whole group there. Let's talk about Applied Digital in particular. I'm wondering if going into earnings, if we're expecting to see, I know you said a blowout earnings is kind of expectation for the group. Do we have a lot of these data centers online? That was one of the questions we had is, will we be seeing some of the numbers from some of these places, or are they still in the process? Is Applied Digital still kind of, I don't want to say a gamble, but still just an unknown factor because they're still in so much of a construction process, or do they have some projects online that will show up in their earnings?
Well, they've begun to realize revenue with their first project. I think one of the things that might be holding back this market and also some of these other stocks is that with their capacity being limited, we pretty much know what it is. Their contracts are pretty visible. There's not a lot of room for outperformance in the numbers. So it's very possible that the analysts have really, dialed in on what the revenue is going to be. So in that regard, the results may not provide a market boosting catalyst, but if it's a market affirming report, an outlook affirming report, the price weakness will be a buying opportunity. So looking at price weakness, it seems like maybe, we've already got that weakness priced into the market because we've had some pretty good pullbacks so far this year.
Yeah.
I mean,
Chris,
APLB 36, 24, it's down like 30% right now. So I mean, that's a pretty good pullback, setting us up for a rebound, I think.
Yeah, I'm looking at some of the very recent consensus price price targets. It's really not much price target news since October for this one, but those targets were more around the $40 range from several different analysts out there. So those are the most recent ones. And right now we're trading around $24. So analysts seem to be bullish on the future. Again, I think the earnings coming up on the 7th of January could definitely have some moves for this one. Chris, why don't you tell us a little bit about Nebius Group? I mean, do you consider Nebius and Applied Digital to be exactly in the same area, or are they a little bit different here?
They're a little bit different, but I would agree that they're in the same, they're in the same general area in terms of the whole AI infrastructure thing. But Nebius isn't about the physical materials. This is the company that's about the compute capability in the their AI-centric cloud platform. So it's not a direct. So it would be like a direct competitor to Applied Digital, if that's what you mean. So I guess my answer is no, Bridget. I guess they're not really in the same.
Yeah.
They're in the same ballpark in terms of they're part of the AI trade, but they're very different parts of the AI trade.
Yeah.
Well, right, too, and it's where they're servicing, because Applied Digital is a U.S.-based data centers, and Nebius Group is overseas. It's in Europe, so they're providing capacity for businesses is in Europe. So there's certainly there is that difference.
Yeah, that's for sure. I want to talk a little bit about another name, and that's Coreweave on the list too, guys. There was definitely some questions about Coreweave, and I can't remember when this one came up. I think one of our guests that we had on the week of Christmas as well was very interested in the future of Coreweave, saying that this low that we're seeing right now is kind of unwarranted. What are your thoughts on how far Coreweave has fallen since it first started?
I think investors have to realize that the stock went off. The stock went on a heater right away, and it's kind of natural that it's going to pull back a little bit. Now, some could argue that the stock's fallen too far. Okay, I think that might be fair, but let's keep in mind this is still the stock got up over $180 a share, and it's not a profitable company yet. And now, it's given up probably more than half of that. So. It looks like it's found support clearly, and it's trying to move higher. I think it will, but I'm not to say I'm surprised that the stock's fallen this far. I'm not.
Yeah. One thing I think is interesting about this one, Coreweave in particular, it's such a new company. The stock just IPO'd this year too. That's part of the story. Those consensus price targets are really all over the place. We've got a $30 price target, the average of 127 and a high of 200, while the stock's trading around 75. So really, those four numbers have almost nothing in common. They're kind of all over the place. When will we actually find out what the true value of this company is?
Well, that'll come over time as they release their results, and then the analysts will start adjusting their targets, and we'll either see them all kind of move up together or move down together, or maybe narrow the range together to where they kind of indicate the valuation is higher or lower than where we are now.
Right.
Yeah. That's a really good point on that one. All right, let's move on to, we've got some other names that people asked about earlier. So we are going to get to Nextdoor and NextEra Energy in just a minute, but a couple of people have asked enough about this that I want to get to it right away. Datavault is a company that, Thomas, you've been really interested in, and this one has had some trouble recently. It was last week. I think it's kind of still in the same boat this week as it was last week. But let's talk about why you were bullish on Datavault to begin with, and wow, now it's down to 65 cents, fallen even further in the last 5 days. What are your thoughts behind this, huge drop for the stock? It was up around the $3 mark, I think, when you were talking about it. It made one of your watch lists earlier this year.
Right. It certainly has had a good story, but within that, I did point out the riskiness of it because the unfounded nature of its technology. It's still developing the technology. and that there wasn't a whole lot of broad market support. There was no analyst support, no institutional support. So what it was short sellers and retail investors kind of battling it out. And what it looks like right now is the short sellers have won. What I'm seeing right now in the news stream is, dividend of warrants. That looks like it's possibly dilutive.
Yeah.
Right. So you got some dilutive action going on, raising more capital. Just kind of shook the market's confidence. But based on the outlook and what they're trying to do, which is to provide a platform for businesses to monetize their data, which seems like a good thing in the world of AI, the outlook still is pretty positive. But we're going to want to keep up with the news and look for some traction to be gained before putting a lot of money into this one.
Yeah, I think that there's not a lot of analyst coverage either. This is definitely that penny stock territory with a promising concept, but who knows if there's a market for it yet? That's a good question with this one. Any advice for investors who maybe got in around $3? If you're still holding on to this one, what are your thoughts, Thomas?
Well, cutting in losses is one of the hardest things to do. It took me a long time to figure that out. The best thing to do is to set stops when you buy the stock. So at this point, the market's down like 75%. Hopefully your stop would have been higher than that, and by now you would have been stopped out. If you didn't do that, it's a tough decision to make, whether you're going to cut your losses or hold on to it. But you're just going to have to look at the position and decide what it is that you think is going to happen, and just stick to your plan.
All right, good advice on that one. Would you be adding a position in this one with it down this low? Do you believe in the future of it enough, Thomas? Or what are your personal thoughts on what to do with this at such a low rate for Datavault?
Well, it was an incredibly speculative play to begin with. And right now it seems like it's down at a more attractive entry. But I'm not saying we've hit the bottom yet. It looks like today the market fell almost 15%. So this one could continue to fall over the coming weeks before it hits its bottom and begins to rebound. Looking at the chart, we might not see a strong bottom till about 30 cents. So it could drop another 50% before hitting its bottom and rebounding.
Okay. We'll give you a break for a minute. We want to talk about Ampx too, which is another one you're bullish on. So we'll get to that in a minute. But Chris, I want you to get into, let's talk about Nextdoor first, and then we're going to go to NextEra Energy too. What's going on with Nextdoor? It doesn't look like a whole lot looking at the charts.
Yeah, I sometimes we're trying to find context for this, and I haven't found anything in particular that's been driving Nextdoor over the last few days. To me, I think this might be traders are looking at the stock and it's down really sharply in the last couple of weeks. It does look like it's found some support. So, I mean, if you're saying you're looking at it, if the question being asked is about a trade, certainly it looks like this could be an area where you'd want to jump in. This has been an area that it looks like it's found firm support. So it looks like the stock would be looking to move higher. I'm not necessarily seeing that supported by the MACD or the relative strength, but that's the only thing I can think about that people are asking about the stock right now, because there doesn't really seem to be any news about it.
Yeah, there's no real catalyst for it right now. It is just down a little bit. So from that recent jump up, but interesting. Thanks for bringing that one. We'd like to cover all of them. We're going to rapid fire through some of them. Let's get to NextEra Energy next. This one, ticker NEE. What's going on with that one, Chris?
NEE. I got to pull that one up.
I know we talked about it before we started, is when we wanted to cover. I think energy in general too. I think it's good to talk about. That was one sector in the heat map today that was doing pretty well.
NextEra is a utility. I mean, they create energy, but they're a utility, making power to the grid. They use a lot of wind, solar, nuclear, natural gas. They have some traditional energy sources, but it's mostly this next generation stuff. And one of the things that really is attractive about this stock is they've been a fairly aggressive dividend payer over the course of the last few years. It's 2.8% right now. It's not super high, but they pay a pretty significant portion of their earnings, and they've been growing at a pretty aggressive rate. and they're still tracking to continue that growth, which for investors, the dividend itself beats inflation, but then also the dividend growth is beating inflation. So it's just like there's really two reasons to want to own this stock as an income investor.
Right. And keep in mind, the residential business that they do have is mostly in Florida. So that's a great area of the country where you want to have your electric business right now. If you're going to be one of these electric providers, that's the area to have it in. To me, I'm not looking at anything on the chart that's scaring me. I think this is just, I think you're seeing this pullback about 6% in the last month. I think that's just garden variety, profit taking. It seems to be finding a nice level to land at, a nice soft landing. And like Thomas said, this is just a nice, it's a buy and hold stock. It's a stock you can own, and they're growing their dividend nicely. And, I don't think there's anything to be too scared of with this stock right now.
All right, very good. Again, rapid firing through to some other names. Yep. We're going to get to ASTS in a minute. So Chris, you can look at that one. Okay. Thomas, let's talk about Nuscale. This is one, if you've been watching again over the holiday week, we had a video with Jeffrey Neal Johnson, another one of our MarketBeat analysts who's really bullish on SMR and its future. But the stock is doing the opposite of that right now. It is quite low, down another 10% in the last 5 days. Really not doing well, down almost 2.6% today. Thomas, what are your thoughts on why SMR continues to be falling, and do you think it's a good entry point to be getting into for maybe a more long-term investment?
I think it is a good entry point because we're back down to the support levels that we saw earlier in the year, where the market got its footing and had that massive rally that you talked about earlier in the year. What's causing this now is the market surged so significantly based on the outlook for its business, well ahead of when that business starts. Right now, there's concern that revenue won't happen for a couple of more years. That gives plenty of time for the market to kind of lose interest, or for just to kind of wander off, and for short sellers to take advantage. There is still a pretty high short interest. It's about 15%. That certainly is playing into this market pullback. But it does look to me now that the last few weeks we've been overextending. The market's just selling because, and like as I said initially, it looks like we pulled back to a pretty solid support level where I would expect to see institutions and analysts start beating the drum again, and maybe start buying the stock again.
I do think that's interesting, Thomas, looking at that institutional ownership. I just happened to have that pulled up when you talked about it. 78% institutional ownership on a relatively small company. That's a pretty different number than we normally see. Normally in a smaller company like this, we're not seeing that much institutional ownership, right?
Well, that's showing a pretty high conviction in the long-term outlook. So to me, that says that the stock will trend higher over time, but we're probably going to have some pretty significant volatility as we have seen this year. That'll probably continue over the next year or two. There'll be some good news that helps drive the market up. It won't last forever. The market will get bored. It'll fall back down again. But over time, those lows should move higher. Eventually, we should squeeze the market up against the $50 resistance level, and then eventually move up to new highs. But it could take a couple of years. I think it might be late in 2027 before they start producing revenue, and it might even be 2028. So we have some time for this one.
Yeah, one question that Amir had, and it's a good follow-up question. We mentioned this before we started about the dilution fears to go with this one. Just run down a little bit about what could be happening there.
Well, dilution fears. Dilution is just when the company sells shares or does some other kind of warrant or some other kind of offering that provides them a chance to get money, but other investors a chance to get more stock. They increase their share count, and that means the existing shares are now worth less compared to the whole. When you have dilution in the mix, it's an invitation for short sellers to pile into the market too, because they're just going to add even more shares to the market and help depress that price, which is what we're seeing right now.
Okay, interesting one. Thank you for covering that. We won't go into Okla right now because we have people asking about Ampx. So Thomas, we're going to cover that one for you next. Go ahead and take a look at anything happened with that. Chris, let's talk about ASTS SpaceMobile first. What's going on with that chart right now?
Yeah, so it's down about 5.5% in the last week. And, to me, I think this is a story that, I really love the story of ASTS Spacemobile. I love what's going to happen with this company. I believe it's got a bright future, and I believe that bright future even justifies a stock that has a valuation, that's pretty eye-popping for a stock that is not profitable yet. But I think the stock did get ahead of itself. I think this pullback that we're having is a healthy pullback. Right now, Thomas made a really good point with the last stock he was talking about, and that is, this is a stock that rocketed so high that it was just inviting short sellers to come in. That looks a little bit about what's going on with ASTS. Some short sellers have come in. Short interest is pretty heavy on the stock right now, and it's just weighing the stock down. So you're going to have your conviction with this one, because it's trading well above the analyst consensus price target. And I'm not seeing analysts I'm not seeing a lot of analysts going above that price target right now. I'm seeing, if anything, some analysts are pulling back from that. So you're going to have conviction here. But I love the story here. But I think that's why the stock moved so much higher at the beginning of December, because people were excited about the White House talking about, we're going to ensure that America has space superiority and America is going to take the lead in outer space. And that falls right into what ASTS does, because they're the Starlink component, but it's more for a mainstream audience. So it makes a lot of sense. There's a lot that makes sense about the company, but the stock price doesn't make a lot of sense right now. And I think that's all that's happening right now, is it's a pullback. And, again, that goes back to Thomas's point of, investors have to have, stops put in and decide when you want to take profits and that sort of thing.
Yeah, I think that's a really good advice on these kind of smaller startup companies that are still in that research and development stage, not fully launched yet. We've been talking about this one all year. Again, we really like the concept about what it's going to do. But just going back to the chart again, I know I just went off of it, but the volatility you have to be ready for when we're talking about this, when people get a hold of the idea, get excited about the idea. And the last 6 months of volatility for this stock have really been a wild ride. I think that is a good advice, to have your stops in place when you're talking about a smaller company like this that's going to kind of ebb and flow and move on any kind of headline, any kind of short seller interest, any kind of
right.
I mean, those moves are hard to manage for a company like this. Will be interesting to see what it does in the new year, if we get any movements on those price targets at all, because like you said, it's nowhere close to where analysts are thinking the stock should be.
Right.
Yeah, super interesting. Okay, let's get to Ampx. Enough people have been asking about it, Thomas.
Right.
It is time. This one has also had a really rough last 3 months.
It has, and I think this stock falls right into the same category of a market that surged. It moved really high. We've had kind of a lull in the news cycle since the last earnings report, provided an opportunity for some profit taking, had a little bit of short interest pile into the market and drive it down a little bit farther. But to me, this story is unchanged. This market is still in this company in an early phase, hyper growth trajectory, hyper growth stage phase company, ramping production, ramping orders. The coming earnings report, we're looking for earnings or revenue to grow more than 200% year over year. I think they're going to outperform this. I think they're going to produce some more new contracts or some more new business, help invigorate the long-term outlook, and help keep the stock price moving higher. One of the things that I was just looking at, while the stock price has been pulling down, the analyst trends are still pretty positive. They're still, affirming their targets, affirming their ratings, pointing to the high end of the range. I think the most recent update was at $17. So that's a $9 advance from where we are now, almost 100% upside. So we're certainly looking for this market to rebound. It's just a matter of when it bottoms. And I think that the bottom might coincide with the turning of the year. We've had the sell-off has been in place since, about the end of Q3, early Q4. It's lasted through the end of the year. Obviously profit taking. I mean, the market rose, from 60 cents to $16. That's a huge amount of profits. Anybody that owned the stock and didn't take profits has made a mistake. And I don't want to rub any salt in anybody's wounds, but when the market moves up that high, the only thing to do is to take some profits. It's you have to take them when they're there, because you never know when you're going to get these pullbacks. And so you take those profits, you hold on to them, you save them. when the market does pull back, then you can reinvest and get back in and lever your position.
Right.
I think that's really sound advice on this one, that especially with a company, again, in the same category of these smaller startups, small
Right.
cap companies, when you see
Yeah.
a huge run up rate like that, maybe get your investment back, right? Is that about the amount that you would say take some profits? How much of them should you be
So
taking?
a general rule of thumb is if you get 100% profit, sell half, because
Right.
then you get all your money back and whatever's left is just free. That is
Right.
your profit. You let your profits run. And if you get lucky enough for them to go up another 100%, take profits again.
Yeah.
Right.
What I'm hearing here, just to point out, between Datavault and Ampx, the two stocks that you've talked about a few different times this year, you seem far more bullish on the future of Ampx than you do on Datavault. It doesn't even sound like
Right.
the same category.
Well, Datavault is technically a startup. They don't have a product yet. They're trying to develop one. And that development is where their problem is, because it's going to take time and money, dilution, to get it to market. Ampx has a product. They're making the product. They've got orders for the product. They've got follow-on orders affirming the utility of their product. It's being used where it really counts, which is in defense applications. So they're apples and oranges,
Right.
Outlook is both good, but one company is doing the do now, and one company is trying to figure it out.
Mm-hmm.
Cool. Awesome. I have to give a shout out in the comments here really quick. I think Jock, I think that's how you say your name. He's watching from Scotland. So Scotland is one of my favorite places in the whole world. I look at property in Scotland all the time. It's my favorite place. So I'm so glad to hear that you're watching from Scotland. I love it.
Hey, you can go on Facebook and become a Scottish lord.
Oh, very nice.
Right? You can,
all these new rabbit
spend
holes
$1
we can go down.
Own part of a castle.
There we go. All right, let's do some others. There's a lot of different names out here to talk about. We've covered the ones that we first wanted to talk about in the first list. So I'm going to go through and just pick out a few different names here. I know Iron is one, and we talked about kind of that same group before. So let's see what that one is doing. There was another request to talk about, I think it was qubits, one of the quantum stocks. So yes, qubits. Why don't you look that one up, Chris? Thomas, let's talk about Iron a little bit. Let's see if it's doing anything different than what the other kind of group of stocks in that sector were doing. It looks about the same as what Applied Digital was, which we know that's a very similar company.
It looks exactly the same to me. Some of the things I see in the chart. So we had the big run up this year, hit a new high, and we pulled back. Now we're showing support above the IPO price. So that to me is significant. We broke above that resistance point. We pulled back, and support is actually above where we thought it would be, which was at the prior resistance. Support at the 150-day moving average. We got a nice hammer candle. Looks like we're entering oversold territory. So we're certainly set up for a rebound, provided we get a catalyst. That will probably come in the upcoming earnings report. If not during the Q1 season, then maybe during Q2 or Q3. But again, we're just waiting for them to build out their network, follow through on their plans, and capitalize on the opportunity. It looks like they're doing it, but again, there's risk, and that's why the market's in a wait and see mode. But with this pullback, it was so significant across this whole group of stocks that I think that we'll see some pretty strong rebounds this year.
I do want to point out one thing that's different here. Again, the chart, like you said, looks so much the same. The analyst forecasts are quite different here. Iron has a much higher consensus price target than what Applied Digital was looking at. Applied Digital now, it looks like it only, if you're looking at the consensus, only has an upside of about 6% versus IREN, which is a lot more on that consensus.
Yeah, it looks to me, let me check real fast. Well, right, because Iron is growing faster, producing more revenue, and is turning a profit, which provides a premium to its valuation. And I think that's what you're seeing in the analyst trend.
Yeah. One other thing with those analyst trends, the recent price targets coming from Goldman Sachs Group, I mean, that price target is only $39, which is pretty much right where it's at right now. All of the recent ones are really bringing that consensus price target down quite a bit. Do you think that there's anything to think about as investors when we're looking at these stocks that saw, for really data center stocks that saw such a big run up in 2025? Is there any pause because we see analysts kind of changing their price targets? Did we get ahead of ourselves as a market thinking that these stocks were going to maybe grow faster, turn revenue faster than they actually are showing they will?
Oh, it did get ahead of itself. That's what we're talking about. The market surged and rushed in, pricing in all of this future growth, overextended, set itself up for a correction, which is what we saw in the back half of the year. Profit taking, yes, but still an overextended market set up for that profit taking, and that's what's been impacting the market for the last few months.
Good. All right. Well, let's get on to the other one we said, which is, remind me, Chris, what are you looking at?
D-Wave, qubits.
D-Wave, qubits. What's happening there?
Yeah, the stock's had a pretty good, it hasn't had a good last 5 days. It's down about 5.8%, but before that it was up about 14.5% for the month. So this is one of those quantum computing stocks, and we've talked about it a lot on the channel before. So the company, for those that are familiar with the quantum space, there's two basic approaches. There's the annealing approach, which is the approach that D-Wave tends to take, and there's the gate approach. And one of the things about D-Wave that's drawing some attraction for investors is that the company is saying, in addition to their annealing model, they're also taking some steps to explore the gate model technology. So there's some excitement about that. But I think, again, we're going to have a recurring theme here, Bridget. This is a stock that's gone up very high, very fast. This is a company that still is not profitable. And I think a little something that investors should keep in mind, the company is growing their revenue, and that's important. But they're still only bringing in about $24 million in annual revenue. The company's stock is valued at about $9.6 billion. That's a discrepancy of around, that's an overvalued stock. And this is me that the company's going to have to show that it can grow revenue strongly in the coming quarters, and also move towards a path to profitability. That's not going to happen until their products are starting to have a commercial market, which right now that market is very limited, if it exists at all.
Yeah, I think that's a really good point. I've got Rigetti's pulled up here too, Chris. Kind of the same exact story.
Yeah.
That it's still in that research and development stage. They're still working on it. They're not bringing in revenue enough to support some of these valuations. And so we did see that run up in the group of quantum computing stocks recently, and now they're kind of moving down at about the same rate.
Yeah, it's a parallel. Yeah, it's a sympathy trade. I mean, they're trading in union with each other. We talked a lot about this last week, Bridget, and I think the point is the same. It's not about whether you believe in quantum or not believe in quantum. It's just the fact that, these stocks are overvalued relative to the revenue that they've got coming in, and more importantly, with the line of sight of where that revenue's going. That's the key.
Yeah, I'm looking at this is D-Wave, right? Qubits. I'm looking at the forward revenue forecast through 2034, and this forecast is pricing in a significant technological breakthrough, because revenue this year is 25 million, and then in 10 years it's going to be over 15 billion. So the market thinks something is going to happen that we don't have a sign of happening yet.
Right.
Yeah, I think that's a really good point, that there's an expectation for that technology to break through, but until it does, it's a relatively overvalued stock. And I think that's a good thing to keep in mind.
So talk about a bubble that could burst. It'll be the quantum stocks. As soon as we realize that, hey, it isn't going to be very soon. It's going to be even longer for some kind of a reasonable application and for revenue to happen. And that market will deflate real fast.
Well, Bridget, everybody's a long-term investor until your stock goes down 23% in 3 months. And then that's when the conviction has to come in. If you believe in the stock, then you're not going to want to get out of it. But maybe, to the point that we've been making, another theme throughout this whole video is, that maybe it's time to take some profits if you haven't done it already, and live to fight another day. And just, it doesn't, I don't think you abandon quantum right now, but I think you have to understand when some of these stocks are getting ahead of themselves.
Right. Something I just thought about too. It's always harder to get your money back than it is to lose it, because $100 you lose 25%, you're down to 75. But to get back to 100, you got to gain 25, and that's like 33%. So it's harder to get your money back than it is to lose it. So it's really important to use those stops and to sell them out when they start to move against you.
Yeah. eHelp just had a really great point about better to use quantum as an ETF. If you believe in the future of quantum, invest in a quantum ETF so that you're not riding, choosing just one to win. And I think that's a really good point, because we do see all of the different quantum stocks really move together anyway. That you're not really just choosing one or another, that you're kind of covered with an ETF. What are your thoughts on that?
Oh, I totally agree. I think if you're interested in investing in the quantum space right now, I think that's the safest way to get into it, because then you're getting a little bit of everything, and you're not having to, like they say, ride one horse and say, okay, this is the one I'm betting on, and what if that doesn't come through for you? So,
yeah,
that's sound advice. Yes.
Yes. All right, we've got about another 10 minutes or so we're going to just do a few more names here. One to talk about, Chris, if you want to look up Sofi. We've talked about Sofi before. Thomas, I think you'll be ready to talk about this one right away. Somebody's asking about Grab a couple of times here, and I think Grab might have made, did it make your list of stocks that you're excited about? No, this was the emerging market list. Is that right?
Yeah, it has been on a couple of lists and a couple of articles recently. I think this is a great stock. Its market is fantastic. Its business is fantastic. It's growing. It's producing profits, expanding its territory, deepening penetration, expanding into new verticals. Among the more recent headlines is it's kind of a leaning into autonomous vehicles. It's expecting to potentially have some AV services as soon as next year. Just really all affirming this long-term outlook for this company. In the chart, what I see is it's taken, almost 4 years for it to kind of regain some traction since the IPO sell-off. But over the last year, 18 months, the market has been edging higher. We've broken through 2 critical resistance points. We've got average daily volume is steadily rising. Back half of this year, we have a little bit of a pullback. Volume has been rising to meet that, still supported above the critical moving averages. Indicators indicate oversold conditions, setting up for a bullish swing, which could begin early in the coming year. Just looking for those subsequent earnings reports to come out, which I think will affirm the latest report, which just showed a lot of strength and improved guidance and improved outlook for profitability.
All right, that's a good quick look at that one. Chris, let's go to Sofi. And Thomas, in the meantime, if you want to take a quick look at what Soundhound is up to, and then also want to look at ARM too. So look at both of those. Chris, let's take a look at Sofi. Anything happening with the stock?
Yeah, it's down a little bit, like we've seen with a lot of other stocks. It's down about 9.6% in the last month. It looks kind of range bound right now. It's got a pretty solid support around 25-ish, but the problem is it's been hitting resistance at around 29-ish. To me, this is a stock that needs a good earnings report. I've always said about Sofi, it's one of my stocks that I put on the yeah but list, because it just seems like the company has ambitions, and they always say and then skeptics say it's not going to do this, and then it does it, but the stock hasn't ever seemed to be rewarded for that. Because I think a lot of companies thought originally this was just a company that was a fintech. It was known for being in the student loan area, and that fell out of favor when interest rates started going up and students couldn't afford to pay back their student loans. But then even while that was going on, the stock was pivoting to becoming a bank, which it's become. So I think there's upside here. I think there's a lot of bullish SoFi investors that want the stock to be treated more like a technology stock. I don't necessarily think that's accurate, but I certainly don't think that the stock deserves the bearish sentiment it's going. It's going to report at the end of the month in January. I think that the stock's consolidating right now. I think it's good. It's a good time and entry if you're looking to get in on the stock, but I don't think there's anything fundamentally wrong that should be weighing on the stock right now.
All right, very good. Let's go to Soundhound, Chris. What's happening with Thomas? What's happening with Soundhound?
Just some uncertainty has crept into the market. NVIDIA is exiting the stake. There are some growth concerns. They're still producing losses, has created some investor concerns, and you see that in the price action. But I think that 2026 could be a pivotal year for this stock and this trade. We're expecting break even this year, and I think that the results could be stronger than what the forecasts are right now. It certainly has been, expanding its network, building its client base, deepening penetration, expanding into new verticals. Plenty of opportunities for it to outperform and to grow its business. So we're really just waiting for these results to come out to kind of affirm what it is that we think should be happening. As far as the stock price upside, let's see here.
Yeah, I've got that pulled up right now. A lot of analysts are really bullish on the future. It's trading well below even what the lowest price target is for this stock right now.
So now glancing at the analyst trends, I'll restate my initial statement, which is some concern among retail investors because the analysts are still very bullish. What I see here is improving coverage, firming sentiment, an uptrend in the price target. We're looking at a 65% upside. So what this is telling me is we get a good report and this stock could rocket higher very quickly.
Yeah, this is a name I like going back to it. I'm glad somebody brought it up today because we talked about it for almost a year and a half on the channel, maybe 2 years, as something, a company to watch, something to be bullish on. And again, pulling up the chart, it was up really well this year. Kind of curious to see how it went from that almost $22 range down to $10, losing 56% in the last year. Do we know what caused such a big pullback on a stock that, again, a lot of people have been really bullish on?
Yeah, it's just concerns about the growth and the valuation. It's growing quickly, but it's not really growing like super aggressively. And I think one of the reasons for that is it's really trying to keep its balance sheet pretty healthy, working on cash flow, less on debt, and that kind of hampers its ability to grow. But again, I think that the fundamentals are real strong, and I'm expecting to see good results. Certainly, results that affirm the current stock price outlook, if not, one that would lift it. But we're looking at 54, 42. Yeah, we're looking at like over 30% growth sequentially for Q4.
Right. I was noticing the same thing, Thomas. Yeah.
Right, and then almost 100% growth year over year. I mean, this company is still growing very, very strongly. I think a catalyst for this market in the coming year will be visibility on profits and expanding client base.
Yeah, so interesting to see such a big pullback and so many big moves on a stock. I said, looking at this time last year, December 2024, it had another huge spike at that time. It's just interesting to see how much volatility there can be even when their earnings and the logistics behind the company don't necessarily support that. It's so interesting.
And even with all the volatility, the pullback early in this year and the pullback that we saw late in the year, they're both showing support above the 2024 high, which to me is the pivot point. So, the market's experiencing volatility, but it has changed from last year. It is in a more bullish posture than it was. Currently, it is pulled back, but it's setting up for another rebound that I think will take it back to the $20 level.
I agree.
All right. Good outlook for Soundhound. Let's get to ARM because this is another similar story. Just looking at this chart really briefly, this one's down quite a bit again, down 20% in the last 3 months. It really took a dive from mid-December to now even more so. What's behind that recent drop?
Well, ARM is the technology behind a lot of the semiconductors that are on the market today, and certainly are part of NVIDIA's architecture. And so the market might have been expecting ARM to see the same kind of boosted revenue as NVIDIA and some of the other AI stocks, and it just isn't happening. And it's just the different business model. ARM isn't really making these chips or designing the GPUs. They just own the technology that they're based on. So they're making some money, but it's not the same as NVIDIA, who has used that technology to create an entire new industry.
Really good point. Chris, I want you to look up one that was a different name that I'd not heard of. Look up GRC. I do have a quick follow-up question for you, Thomas, on ARM really quick. Do we think that this is another opportunity with how far it's pulled back right now? It's not quite at the bottom of that 52-week range, but it's approaching it. Do you think this is a good entry point for a company that could continue to have a better 2026? I think that's the question a lot of viewers have right now is we're seeing these lower stocks, these pullbacks right now.
Right.
Is it a time to get in, or is it still a bit of a gamble with a lot of unknowns of where the AI market's really going to be priced in at in 2026?
It looks like it could be a little bit risky right now. The valuation's pretty high. We're not looking at a lot of really robust growth over the next few years. There is opportunity for some weakness. So maybe with this one, maybe wait for the market to show you a bottom before getting in. Right now, I'm not seeing the bottom, but maybe around $100, you might see some buyers start stepping in and start showing some support.
Okay. Interesting look at that one. All right. I wanted to do, this will be the last one we get to today. I wish I could get to all of them really quick. GRC is the one we want to cover really quick. And then I also wanted to share, if you haven't checked it out yet, this is from Thomas. And so if you haven't looked at his latest report, this is on the top 10 best stocks to own in 2026. This is his special edition New Year's look at some of the top 10 stocks to look at for the year. If you've not read these before, these free reports are on marketbeat.com. And it's a really in-depth analysis for some deeper education. If you're looking for it, you can scan the QR code or take a look at that report at marketbeat.com/2026 stocks. It's a really fun report. I wanted to make sure everybody knows it's out there. All right, Chris, let's get to that last one. What is GRC? I don't think we've ever had this one pop up necessarily.
Oh, we have. We talked about this. This is Gorman-rupp. We talked about this in my 5 small cap videos with you, Bridget.
Oh, that's right. Okay, I do remember now. Yes.
They're a supplier of pumps and pumping systems for a variety of commercial applications. I think when we did our video, I called it the picks and shovels for the picks and shovels.
Yes.
So this isn't a glamorous stock, but what I was looking at in the video we did was I was looking at small cap stocks that had 10%, at least 10% earnings upside forecasted for next year. Gorman-rupp fit into that category. The stock's up about 29% so far in 2025. The consensus price target still suggests it could see about maybe another 20% beyond that. So it doesn't get a lot of analyst coverage because it is in that small cap space. But one thing about this stock too is it's a dividend king. So it's
Right.
increased its dividend for over 52 years. It's been over the last 3 years, it's been growing its dividend at around 5.8%, which is double the rate of inflation wherever you peg that at. And it's got an attractive dividend payout ratio of about 39%. So the dividends are also safe. This is one of those stocks that you can buy and hold it. But I think the reason why you want to do it right now is because there could be that rotation coming into small caps. And if it does, names like Gorman-rupp are going to be the names you're going to be looking at. Because again, it's an infrastructure play. It's just kind of it's one that's on a tangent from the bigger names that you're hearing about.
Right. Look at the chart. End of the year, broke to new highs. We pulled back and confirmed support at that prior resistance. And so it's looking pretty good as a potential play for next year. And like Chris was saying, saw that dividend. I was like, wow, that's pretty good. That's pretty nice. I like that one.
Yeah, the sector rotation is a great point too, a good way to end on, because we did see that at the start of last year, kind of a rotation into the Russell 2000 a little bit more. Then April changed everything. So it'll be interesting to see what kind of cyclical moves we see with the market and rotation moving into the new year. Guys, thank you so much for your time. It's the last one of 2025 anyway, but we will for sure be back again next week when it's 2026. Thanks everyone for joining us over your holiday break. I know many people are still out there investing, looking at stocks. I hope you have a great end to 2025 and a wonderful 2026. We'll see you back here in the new year. As always, everyone, happy investing.